Hello guys! If you've been keeping an eye on NIO's story over the past decade, you already know it's been a long, ambitious, and often difficult road. From the outside, it might seem like endless losses and high expenses, a company that just keeps spending billions on R&D with little to show for it. But what's happening right now marks a turning point. We're entering a moment where all those years of relentless investment, trial, and innovation are finally converging into something tangible: profitability. Yes, you heard that right. After more than 10 years of heavy spending, NIO is now standing on the edge of a financial transformation. Today, we're going to break down exactly why that's happening, why NIO's leadership has remained so confident despite years of red ink, how its deep investments in technology are finally paying off, and what this means for the company's long-term future. So, let's dive in. This is not financial advice. Please do your own research. To really understand NIO's current success, we have to start with one key truth. NIO's massive R&D spending was never wasteful, it was strategic. The company knew from the beginning that competing with early giants like Tesla wouldn't be easy. Tesla had a head start of nearly a decade in EV tech, manufacturing, and data. So when NIO entered the scene later, it had two options: either play catch-up slowly or double down on R&D to close that gap fast. They chose the second path, and that meant billions poured into developing their own chips, software, high-voltage platforms, and operating systems. A senior executive once explained that because NIO didn't start as early as Tesla, they had to work twice as hard to achieve the same technological maturity. That's why their R&D spending seemed unusually high compared to revenue. It wasn't about excess, it was about acceleration. Every yuan and every dollar invested went into one goal: building a foundation that would allow NIO to design, manufacture, and control its entire ecosystem, rather than relying on third parties. That's how they've built the groundwork for the profitability wave we're starting to see today. Now, let's talk about what those R&D billions actually achieved. One of NIO's biggest breakthroughs is its ability to design and produce its own computing chips. Most automakers, even many EV leaders, rely on NVIDIA or Qualcomm for AI processing. But NIO took a different route. It developed its NX chip, the world's first 5-nanometer automotive-grade computing chip. This is more than just a technological bragging right. Producing their own chip means NIO no longer needs to pay NVIDIA for 4 expensive chips per car, which saves roughly 20k yuan, about $2,500 on each vehicle. That's a huge boost to their profit margin per unit. And it doesn't stop there. NIO also developed its own operating system, rather than paying licensing fees to Android. That means full control over updates, integration, and user experience while saving significant long-term costs. These steps together translate to one big advantage: higher efficiency and lower cost per car. In simple terms, NIO can now make better, safer, and more high-tech vehicles at a lower production cost, something its competitors are struggling to match. This is why, as of late 2025, NIO's vehicles are consistently outperforming rivals in interior space, technology integration, safety ratings, and energy efficiency, all while being priced more competitively. NIO's CEO recently referred to this phase as the season of harvest, and that phrase couldn't be more accurate. For nearly 10 years, NIO has been planting seeds, building the infrastructure, software, and technical base needed for long-term success. Now, those seeds are starting to bear fruit. In the past few months alone, we've seen the launch and ramp-up of several new models, including the ONVO L90, the all-new ES8, and NIO's third-generation flagship vehicles. Each of these models is not just another car, it represents the culmination of NIO's R&D philosophy. The Nomad, for instance, achieved the highest safety ratings in both Chinese and European crash tests, a clear testament to how much progress NIO has made in its engineering capabilities. When it first launched, some doubted the company's direction, questioning whether these ambitious vehicles could find a market. But those doubts didn't last long. Sales have now surpassed combined totals of competing small EVs like Mini and Smart. The ONVO L90, launched in July, marked another milestone. It demonstrated the real-world advantage of NIO's electric architecture, combining ultra-low energy consumption with exceptional space utilization. It was designed not just as a product, but as proof of the superior efficiency of pure electric platforms. What's even more impressive is that NIO didn't limit its investments to cars alone. The company also spent billions building supporting infrastructure, its own charging and swapping network. In the past year alone, NIO constructed over 1,000 charging stations, even though its user base wasn't expanding at the same speed at that time. This might seem premature to outsiders, but it's another example of forward-thinking investment. Building the network first ensures that when the customer base grows, as it is now, the infrastructure will already be ready to support it seamlessly. And it's this kind of planning that separates NIO from short-term players. While other brands wait for demand to justify building networks, NIO has already positioned itself to capture that demand when it comes. The same goes for its research into autonomous driving, AI, and battery systems. These are not quick profit technologies, they're long-term strategic assets. Each one strengthens NIO's ecosystem and will gradually translate into higher margins as manufacturing scales up and external dependencies decrease. The company's CEO acknowledged the pressure that comes from a decade of financial losses, especially as a publicly traded company where transparency means everyone sees the numbers. But he also made it clear that those losses were necessary. They were, in essence, the price of building the future. Naturally, some people worry about NIO's sustainability. It's understandable. When a company spends heavily without visible profit, it creates fear among potential buyers. After all, buying a car is a long-term decision, and no one wants to purchase from a brand they fear might not exist in a few years. NIO's leadership understands this, and that's why they've been vocal in communicating progress and stability. The CEO took a moment to thank the users who continue to trust and support NIO through the difficult years, early adopters who saw the company's vision beyond temporary setbacks. And now, that trust is beginning to pay off. Since March, as NIO began delivering its third-generation vehicles, the company has entered a completely new product cycle, one that's stronger, more efficient, and better aligned with both market trends and profitability goals. Financially, things are improving fast. The expectation is that by Q4, NIO's earnings report will show a near break-even performance, and while full-year profitability might not happen until 2026, it's becoming clear that several quarters in that year could finally turn positive. When you look at the big picture, everything adds up. R&D efficiency is rising, cost per car is falling, and sales momentum is building. In other words, all the signs of financial maturity are starting to emerge. So, what we're witnessing right now isn't luck or coincidence. It's the direct outcome of a decade-long vision, a strategy rooted in patience, innovation, and unshakable belief in technological independence. NIO didn't try to take shortcuts. Instead, it built its own ecosystem from the ground up, from chips to operating systems, from charging networks to advanced autonomous systems. And now, it's entering a phase where those efforts are translating into real financial results. Competitors are finding it harder to match NIO's mix of technology, value, and product design. The company isn't just catching up to others, it's beginning to outpace them. That's why NIO's CEO calls this period the time to harvest. The seeds have been planted, the groundwork is solid, and the market is finally responding. If things continue on this trajectory, NIO's path to profitability isn't just possible, it's inevitable. The next few quarters will likely confirm what long-term believers already know. NIO's strategy is working, and the best is yet to come. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.